We are alive, ladies and gentlemen. Another beautiful day in the jungles of Costa Rica. We love seeing plants of green and plants of red. We try not to get scared. We remember the macro market cycles are the best to pay attention to, and those who are rewarded the most are generally those who know how to play for the long term. So what we're going to do is start by looking at Bitcoin here on a bit of a shorter time frame than usual today, but I want to go over something I think will be valuable for all of you that are learning. Even though we are focused mostly on macro perspectives, these smaller time frames help us see some of the visualization of the story and to make the most out of our time during this educational process. It's the best way to go. So bam, this is actually Bitcoin on the 45-minute. Right now we have a Bollinger Band. So oddly enough, well, here, generally you're probably most used to seeing a chart that looks like this, where you would have the candlesticks and wicks, but in moments of noise and lack of clarity, I actually like to use the area chart. So the area chart here is now defined as our price in the color yellow. Now, one of the fun things about the 45-minute chart, and what I want to go over today, two key factors I think are important. Number one, you'll notice that this green line I'm drawing here follow the supply line on the break all the way down to basically the bottom of our chart. And what's nice here is we've broke into the Bollinger Bands for the first time since we dropped down from $56,000. So this green line, I'm actually going to make it white so it stands out a little bit more. Bingo, like that there. This white line was our supply line to the downside. So often when you see these supply lines coming to the downside, you will want to retest them as well. And if we were to do that, and I'm drawing here in yellow now, what's fun is you could see the potential of what's a small head and shoulders starting to form. Now, we don't normally like to do pattern trades, so we can also, for now, draw a horizontal line and assume that right now what we're witnessing was our primary shakeout, our first automatic rally, our secondary test. Here we'll probably have a spring. Again, we could touch down as low as 31,000, come back into the trading range and move higher. And on a bigger perspective, I think we'll get a clearer picture because, again, the time frames here are very relevant. The only reason I wanted to look at the 45-minute was just to give some clear inference on the use of the Bollinger Band, its relationship to the supply line, the potential again for what might be a small head and shoulders here before we turn around, and the potential for what I think again could still be a further downside into the spring of around 29,000. Now, both of the green lines highlighted here and here are actually we've had drawn since March of 2020. So for those of you that are new to this, one of the reasons why I'm so interested in both of these two green lines is because these are our regression trend lines. Regression lines follow the support bands as we grow through the bull market cycle. Now, in the down market cycle, you would use them the other way, but for now, we're in a bull market. We've been in a bull market since March 11th, 2020. So what becomes important to me are the two areas, again, of this supply line between around 30,000 here and around 47 to 57,000 here. Now, you would be kind to note that lo and behold, our Bollinger Bands actually happen to fall right in between those at this particular moment, which would give us this nice, healthy looking flow where effectively, if we were to draw in two more parallel lines in the middle of the range, like this, and we'll double that up like this. So again, the bull market is not over. I believe we are just forming a new reaccumulation zone. So one of the downsides is that a lot of the people who are studying Wyckoff are new to it and they don't know a whole lot about it, which is great. At least they're learning. That's fantastic. One of my favorite things to do is learn. But one of the things that I think that they're getting wrong is understanding the macro perspective of the market itself. So again, I think what we're going to witness is something like this. And we're going to move into a trading range probably over the next month or two before continuing higher. So it's very likely we could see that drop or spring down to around 28,000 here. And again, you can see the kind of the flow and the style of what a trading range here might look like effectively before we move higher. So I've gone over this a few times, and I believe that this will be a reaccumulation after decline. We have seen these take place before. So in my previous videos, we've gone over this, that what I believe we are witnessing is an analog to what we saw back in August, where Again, had you misunderstood how trading ranges work, you would have thought that this was the end of the bull market because there was a distributional pattern here, but the distributional pattern turned into a reaccumulation after decline, and you would have got screwed out of the marketplace. So don't be a retail investor. Don't get screwed out of the marketplace by not understanding the macro perspective of the story here. What's beautiful is this is the first correction we've had in this market cycle. And it is almost a perfect equivalent of what happened the last market cycle. So we went over this in our other video. Aside from the fact that there are a bunch of on-chain metrics that show we are still bullish, this moment here, again, notice how we shot above the top of the regression line and then came back down into the channel, hit the bottom of the regression line, and then very quickly took off. Now, I don't think we're going to very quickly take off into new highs. I think what we'll do is we'll end up building a cycle of accumulation inside of these regression bands that we have today. So again, we zoom out to where we are today. We remember that what we're doing is studying things like scale and variance, which means that the cyclical nature of the universe repeats. It's basically repeats over and over again. For those of you that like to study mathematics, one of the most fascinating things about this is that the universe does not escape consciousness, or rather you cannot escape the universe, and therefore any cyclical pattern that you see repeating in the universe probably repeats at scales that are way bigger than you can comprehend. It is also important to note that the market is older than you are. It has outlived every single person. Speculation has been around for longer than the average human. So that's important because it will be here after you die as well. And it's probably a little smarter than you are, at least in terms of understanding it. And therefore, this is why we like to use things like abstract mathematics to understand the nature of this beast effectively. So on the 6 hour, again, I think it'll look a little clearer. What I suspect we're going to get is that we just had our primary shakeout. We'll probably have our first automatic rally somewhere around $42,000. We'll come back down to around 32 to 33. We might have a spring to 29,000 still, jump up above the box, and probably by June, July, August, we will be on our way and into new all-time highs, probably shortly afterwards. So this is a reaccumulation after decline. Again, for those that are new to studying Wyckoff, and there's probably many of you, all of a sudden everybody is studying Wyckoff. It's very easy to get these things wrong if you don't know what scale and variant means. So I think that's hyper important. So again, I'm just going to clarify one more time. I think we're probably going to run to around $43,000 to $42,000. We'll come back down. We'll form another secondary test, maybe a spring to 28 to 29,000. We'll have our first SOS into our reaccumulation after decline, and then we'll be on our way to new all-time highs somewhere between June, July, August, the end of June, beginning of July and August. So keeping a close eye on that. We won't change this drawing as of this moment, but what we will do is go ahead and look at some of the other places of speculation as well. So here we are about to be on the 4 hour for Ethereum. Ethereum, I think, is going to make something very similar, which is going to be a reaccumulation after decline. The DeFi sector is just so hyperbolically undervalued at this moment. So I would keep that in mind that, you know, generally, first off, we don't need retail investors for bull markets. Retail investors do not make up bull markets. They make up the end of the bull market. They're basically not important in terms of the price going up. Just be aware of that. So you want to show up when all the retail has left, which is basically what has happened now. So again, I think we're about to get a reaccumulation after decline. Again, if you look at how we've charted Ethereum here, we've done the exact same thing. Again, these drawings have not changed since March of 2020. Lo and behold, you see something very similar to what we saw with Bitcoin. As soon as you went up here, you broke above, you saw a dramatic increase, and then we've pulled back right to the second regression line, almost identical to what Bitcoin has done today. So because of that, I do suspect that what we are going to witness is another reaccumulation period, probably between $2,900 and $2,000 for the coming month or two, to represent a reaccumulation after decline. Now, could the bull market be over? Yeah, but it seems unlikely to me. Again, even with this moment here, we consistently said, guys, look, we could go down to $32,000. Watch every single one of my videos. I said, yes, we could go to $32,000. Although I was leaning against that, I did take out a big chunk of profits at around 56,000. You can watch our videos on that. Just because the same inference goes to the point here that when you're up this high and there's only so much room for upside, which is we think the top is probably around 120,000. We have approximately the exact same amount of upside potential as we did almost the downside. So we removed the risk because it could go either way. But nonetheless, let's take a look at the rest of the altcoin market and see what's going on there. So we've seen, well, first off, if we look at some of the smaller time frames here, I think we're getting an interesting story that's starting to take place. Number one, we're going to look at Serum right now. So I believe Serum was in a falling wedge. We've bumped right up against the top of the previous supply line with a market cap of only like $150 million. Just based off what I know, that's highly undervalued. For instance, my mentor, he started a company called Silk Almond Milk. They did $9 billion a year in revenue from selling water and almonds, or water and soy. So when I see something like Serum that has a $150 million market cap, I can generally say that's undervalued still, right? It's not a peak out moment. Even when it was at its high, it was only 480 million, which is fucking chump change when you can imagine water and almonds for $9 billion a year. So what I think we're witnessing here is a really unique moment. And again, we'll look at the larger time frame just to kind of get the general story. So obviously, we had this huge explosion of Serum and price. We've come right back down to the bottom of our widening megaphone. Maybe I'll get rid of, well, whatever. We'll leave it kind of messy for today. It doesn't matter. For those of you that are learning, you'll do a great job learning anyways. Notice how we're kind of got stuck underneath this long-term trend line at the moment. I do believe we're going to break above that and probably to come retest the $6 to $7 area. Avalanche shows us another really clear picture. I think Avalanche was extraordinarily undervalued the other day at $12. And what's fascinating again here is that when you look at the short-term time frames, anyone that was taking trades, even from close to the $13 area, is already up approximately 50% on their trades. And this is what the big boys do. They look for moments to accumulate at these low prices, and effectively took out huge bites here. And you can also see that we were rising on diminished price supply volume. So rising price, diminished supply is always a good sign, and that's what we're seeing right now. I believe the precursor to the continuation of the bull market. It's going to take some time for sure. Like, we're not out of the woods yet. You know, a lot of retail hands are probably going to be selling, being like, yay, finally I could get out of my position at less of a loss. So there's that. The next thing is, let's start from this side. Matic has been one of our amazing plays. So we've took most of our early positions in Matic at around like 1 to 3 cents, way the fuck back here, which is amazing. It's probably one of the best trades I've ever made. I wish I'd kept all of it. But even still, with the small amount that I did keep in there, it's performed extraordinarily well, and I'm just going to let it ride. There's very little supply left on the open market. And we've seen, what is this, like an 80% recovery? Yeah, like an 80% recovery in a very, very short period of time. Waves. Waves is another really interesting one. These decentralized exchanges, again, remember my general sentiment here is I'm looking for companies that have revenue models. We've come almost basically back down to the long-term supply line and trend line. So we're looking at that. And just for fun, I wanted to go over these two topics here as well. If we look at things like Waves, currently, guys, what's crazy is, well, first off, like with FTX, with Waves, with 1inch, you're seeing these huge APYs on the ability to loan out your stable coins, right? So the other day during the bull market, or during this kind of downtrend, I was getting 150% APY on my US dollar stable coins. So seeing these APY stakings of 40 to 60% for Waves, and then 152% on the Binance chain for 1inch is just absolute craziness. Again, I really think the DeFi sector is undervalued. So if you go and you follow me on Twitter, I suggest it. That's why I said this morning, damn, for those of you who think the bull market is over, you do not understand how undervalued the DeFi space is. 150% APY is just madness, right? So back to the prices here. I think retail is getting shaken out. Again, sadly, that retail is not usually super focused on being good investors, but ultimately what you want to do is be able to think about the macro perspective here. I'll give you an example. For instance, not all of your investments are going to work out the best if you only make one investment. One of the best things to do is just every month at a particular time of the month, use a particular amount of capital to make good investments on things that you think are valuable. And then that way, when you're moving forward, you can average out a price that becomes the most beneficial, because that most of the time, the bear market lasts longer than the bull market. The bear market for Bitcoin was around 1,000 days. The bull market here is probably going to be around 600, and we're only about around 300 days into this bull market. So we've got further to go, in my opinion. 1 inch here too. What's crazy again is that these are just really undervalued, I think, for what they're potentially able to offer over the coming years. One of the interesting parts though is again, we could make an argument that this is a distributional pattern to some degree, but there's just not a whole lot more room for downside. So I think, again, what we're witnessing is that because there was so much leverage in the system, we're seeing these overly dramatic backup phases come into the market, just because there was so much leverage and there's such a very small exit door. It's really not, I'm assuming that it's the leverage at this point, because in contrast to 2017, you have astronomically higher numbers and higher volumes of leverage than we ever had in 2017. And our corrections there were nowhere near as brutal at the changeover points. This was like at the same moment, all this like billions of dollars in leverage was liquidated. So we'll keep moving on here, but both 1 inch waves, things like Serum, these decentralized indexes like Uniswap, are big fan of. So again, what you try to do is you buy like, oh, look, it's the 12th. Oh, it's the 21st. Oh, it's the 10th. Oh, it's the 10th again. And you just keep making accumulations and things that you find interesting on a month-over-month basis. This is the best way to play the long-term investment strategy. Again, for those of you that have not yet read the book 100 Baggers, go read it and understand that there are people who have made billions of dollars, and you don't got to listen to YouTubers flaunting. You could just follow people that have made hundreds of millions or billions of dollars already, because most of the people you see just got lucky. That's a different story. Okay, Woo Trade is another one. We're going to open up a new series. For those of you that are interested as well, go to arcanebear.com. We are opening up a new series. There's going to be 2 pieces here. Number 1, under Wu Wei, you will be able to find all of our venture capital investments, which is usually us making an investment in a company long before there's a token. And also, if you go to arcanebear.com/club, you'll be able to see all the research that we've done into the portfolio positions that we have. Now, each one of these positions, it does not list how much of each token we have, just that we have some of them. Now, to some degree, it's closer to how much near the top it is, the relevance of my interest in it. As you can see, Avalanche and Matic are right near the top below Bitcoin and Ethereum. That's about approximately the weight as well. I'm not going to give you a percentage, but because the price is always changing, so therefore the percentage shifts every 5 freaking minutes. But what you'll be able to do now, as a free offering for anyone that's interested, you'll be able to access the research that we do into tokens by clicking on anything in the club and scrolling down and reading about why we're interested in them and why we think that they're valuable. The teams, the distribution of the tokens, the lockups, etc., where you can buy them if you would want. So we're going to continue to do that research. Same with Avalanche here and down the line. By the end of the next month or 2, all of the research will be filled out, and this will all be free for you guys. So we're gonna start doing videos called "What the fuck is Woo Trade?" or "What the fuck is 1 inch?" These are going to be little deep dives that co-align with the research that we have already done on our website, and a video that co-aligns with it as well. So thank you to our admin team and staff helping us build this in the background so that I can continue to make videos while also having the written content and format here as well. So again, on Wu Wei, these are all venture capital investments before there were tokens. And then on arcanebear.com/club, those are all the investments of tokens on the secondary market where we were not able to either get in at early stage, pre-seed, or sale. And we're just looking at the open secondary markets as investments. Avalanche was one of those. Fetch, Matic were one of those. Again, getting Matic at pennies is just amazing now. It blows my mind how right we had that. Same with Fetch, down at a penny, now at 26 cents, is astronomically powerful trades and investments when you know how something like 100 Baggers works. So I'm going to keep today's video short because I have some other things I need to do about my time. Just really quickly, we will go over Mercurial. Big fan of Mercurial. They just launched. We've got our podcast open. As you can see, they launched on the day that the market dropped around 40%. So they also followed that same charismatic downtrend. And what it looks like to me is that we are witnessing a very, very thin accumulation range. So we'll probably come down a little lower with Mercurial here. But I suspect that we're going to form a nice reaccumulation range here, probably in this nice band of around 20%. I don't see it going too much lower. So if you didn't get in on their listing, these are pretty decent accumulation areas in my opinion. Synthetics, again, this is where we could again, when we were actually looking pretty strong here before the market fell, and then again we've fallen right down to our bull flag. So this is actually a bullish signal. We could make an argument that this is a spring still. So I'm not particularly concerned, but again, just so much leverage in the ecosystem. When people run for the door, everything gets pushed down. A lot of you are like, oh, why is everything going down at the same time? It's because all the markets are interrelated through something we call human psychology. And when people get scared, they run for the door and try to exit every single direction that they can. Link, another really interesting one here too, because what we've witnessed is this huge explosion, right? It was a beautiful SOS forming. And again, first off, if you guys are new to the investment world, you shouldn't try trading, because you're going to freaking fail every step of the way. Because you're like, oh my God, I bought the top. And then you like sell here at a loss. And had you just kept accumulating things that you knew were valuable, you'd have a lot of room for upside still. So don't do stupid things. A, play with leverage, or B, think you're going to be a great trader right out the gate. Understanding the trading ranges can just help build extraordinary amounts of confidence for the long-term playbook. But ultimately, the best strategy you should focus on is how much can I invest every month in the things that I think are the most valuable. Anyways, this is Teal with the Arcane Bear. Thank you all for joining us. Please give us the thumbs up if you enjoy this content. Please leave your questions, your comments down below. We will be back again tomorrow. I've got a podcast. I think it'll be live tomorrow. Yeah, it'll be tomorrow, Wednesday, with Avalanche. And then Friday, we'll have the Mercurial team as well. So we're going to keep doing podcasts. We've got a few more hopefully coming up on the line as well. Awesome. I'm going to take a look at a few of your guys' questions just to go over everything, and we'll go from there. Y gives us a little black cat. Oh, what a cute little kitty pase. Thank you. Considering something juice has a global market cap of 484 billion. That's it does not. I don't even know what something juice is. I think you're just making stuff up from what I can tell. You got to remember, guys, especially in this crypto market, it's really easy to fake market caps. Almond Milk was doing 9 billion a year in revenue. Like that's a fact. You can find that on Inc. 500 forums. Like this tit juice you talk of, it probably doesn't even exist in real life. Any good entry points on Matic? Again, for most of you guys, you shouldn't be worried about like buying the dip so much as you should be interested in building a long-term 10 to 15 year perspective of how to build wealth. That's how everyone that's good has become successful. So keep that in mind. I see you guys are asking for on-chain glassnode analysis. We'll take a look at that actually just briefly here. There is one thing I wanted to go over. So this is the glassnode analysis. One of the nice things here is that we've seen a consistent decline in Bitcoin on the open exchanges since we hit that relative bottom. And we saw an extraordinary amount of supply come onto the markets to push the price down as low as it went. That was unusual. We went over that. It looked coordinated to be able to push that much into the market. Like that was an entity that was much bigger than a particular hedge fund or institution. That was like 10 acting at once. I believe it may have very well been the People's Republic of China for all we know, just because of the supply signature was we've never seen anything like that in these markets. Again, if you go to, there's other Glassnode data we could go over, like the reserve risk ratio here. I think this is a really important one. And the stock to flow deflection model is another one of my favorites. But the reserve risk here, again, guys, remember, we haven't seen the potential to get Bitcoin at this low of a risk rate for quite some time. Like we're almost back down near the no risk entry point, which is freaking crazy. Like the last time we've been this low was Bitcoin at $13,000 or $10,000, right? So we're pretty much at an equivalent of Bitcoin being at $10,000 today in the previous cycles. So again, if you look, again, what's interesting here is if you compare January 2017, that first big dip, this looks very similar to what we saw before prior, although I don't think we're going to rocket right back out quickly. I do think it takes a bit of reaccumulation time here. Again, our goal is to get rid of retail investors because they're highly emotional and they're part of the reason why the prices fluctuate so much. They do stupid things like take out extraordinary amounts of leverage because they listen to YouTubers telling them to do all the wrong things. Don't do that. Or do, I don't know, do whatever the hell you want. If you want to lose your freaking money, you go right ahead. Like, it doesn't bother me. Listen to assholes. That's fine. Help them make more money off your losses. That's great. But I'm warning you, that's why they have capital, is because they've basically taken advantage of you at scale. So that's important to remember. Anyways, we'll leave it at that. Last one here said, Leon Light says, do you have an opinion on Luxo? I have no idea what that is. I'm not a big fan when you guys kind of drop that stuff on me, just because it's probably nothing. Like, first off, if it's not on my screen already, I probably don't care. I do a fair amount of research and due diligence. Luxo is a blockchain infrastructure providing a series of standards for physical and digital consumer goods. I don't know why you would need a specific chain for that. Avalanche works great. Why would you need Luxo? Yeah, this just sounds to me like they're trying to sell a product that's not necessary to raise money. They create ERC20 and ERC725s. They're not even a primary blockchain. Sorry, Ian, but I don't like that. 20,000 COP. What the freak is a COP? COP to you. I don't even know what a COP is. What is that? Oh, a Colombian peso. Okay, interesting. Caleb says, yeah, man, speaking of altcoins and DeFi, what are your thoughts on Reef? Looks like bullish continuation pattern. Are they releasing new version of the mainnet this Friday? It could be the case. Again, I'm not really sure. Again, the whole DeFi sector, guys, a bunch of you guys have asked me questions in the past. Like, for instance, Theta was a great example. Theta was a great example where I'm like, hey, I don't like this, but if you think something's interesting, you should follow your own intuition and your own research, technically speaking, right? I focus on a very, very small group of ideas that fit my financial railway profile. And those are the only things I make investments in. I've just learned to kind of narrow out my my wheelhouse. Avalanche is a great example for that. It just does me well to not try to break outside of the things that I understand. Again, I think Avalanche at $10 is like at $19 here. This is so cheap. It's crazy. It doesn't even make sense. Like, this is an extraordinarily powerful project. So I don't know. We'll go from there. Oh, will the NASDAQ correction call further drop? Okay, so that's actually, we'll finalize with that question because we have talked about the NASDAQ prior. And more importantly, I'm actually interested in the S&P 500. So let's take a quick look at the S&P 500 and the VIX just to kind of finalize today's episode. So it is Tuesday at 10 a.m. And nice, the VIX is back down, not below our falling trend line. I'll clean this up a little bit here, so it's just the volatility index moving. So here you can see we've fallen below the rising trend line we had almost, which is good. We're still in an area of volatility, that's for damn sure. It would be nice to get back below this falling trend line that we had gone, but luckily we have not gone back to the peak of that at all during this. That looks great to me. If we get back down below here at around 13, we're in smooth sailing territory. But on the secondary aspect of this, looking at the S&P 500, we were charting these trading ranges here. And let's actually go on the 4 hour so there's a bit more data. And we can even use the candles for fun here. So it's very likely that we're going to see, again, not more downside, but we're going to have a continuation pattern for Bitcoin and the S&P 500. Again, I suspect that we probably get a bit further of a run up for Bitcoin, probably 42,000, and then back down to around 31,000. And we probably play in that $41,000 to $30,000 range for about a month or two longer, with a spring down to like maybe 25, 28, 29, just to scare the crap out of the last retail investors before they're gone. So back to the S&P 500, I do suspect that we'll see something not too dissimilar, where what we'll do is we'll probably have a reaccumulation range like this. And I suspect it's going higher. At this point, my main thesis since 2016 has been that the markets will pretty much only ever go up from there on out. And we were right. And that was a pretty ridiculous moment to think that that would work out properly. So was there downside in the S&P 500? Yes, at the beginning of the pandemic, people were extraordinarily fearful. But notice My original thesis around only up for the S&P 500 took place here in 2016, and technically we've only gone up since then. Even when we had our retracement, we've still been in positive for the S&P 500 the entire time we took that thesis. I stand by that thesis. The US dollar is basically worthless. Therefore, anything that is an asset is going to continue to go up. That's about the end of that one. Anyways, again, thank you all for joining us. This is T with the Arcane Bear. Please follow us on the social media channels below. One of you guys is asking about XRP. I don't hold it. That's all I can say, really. My deep dive on it, I think it's a banker's coin. I'm not a fan of that. I would rather see things that empower the average individual, and XRP is not one of those things. I still think it'll probably end up getting called a security because they've used it to raise money. It's basically a security. I don't see any other way around that. They can argue all they want, but they've been using it to pay for their company. So it's a fucking security. I mean, it's a pretty simple argument. Like, the fact that they're trying to argue against that is they're just jealous that they didn't launch it properly and go, hey, let's make a way to give away XRP that's not just us selling it from our reserves. So I'm not a fan of that. Too much gray area in the nonsense world. It's probably a security. It's owned entirely by them. They're not giving it away for free to you, so they're probably going to lose that battle. That's just my opinion. Could be wrong. My lawyers could be wrong, but we think it's going to lose that battle based off the current steps that they've taken so far. Anyways, things looking good still. I would like to see a rip to the top of 43,000 before we come back down, but we actually may come back down a little lower first to test the bottom of the Bollinger Band here anyways, so I'm in no particular rush. We'll see you guys again on the next episode.